So, is it just me, or is the British pound acting like it skipped its morning coffee? After we saw softer inflation print, sterling lost some of its swagger. And traders, now we are already seeing whispers about early rate cuts. Meanwhile, natural gas is heating up once again. And yes, the pun was absolutely fully intended. And lastly, the FTSE 100 is defying the gloom within a solid rally. So I love to see the good morning messages already coming through. As always, before you place your next trade, watch this, join me, ask questions. Let me assist you by maybe creating some clarity for you before you jump into the markets. So for those of you who don't know me, good morning. I'm Francois. I'm your market analyst here at ATFX Africa, and this is your daily market brief. Now, during this session, I unpack the biggest movers across currencies, commodities, and indices, blending fundamentals and technicals, and well, adding just the right amount of common sense. Because let's face it, markets don't always make sense. Please remember that at no part and stage during to the session here today will I be providing financial advice. It's not what the session is here for. The session is me sharing my outlook on the markets, my analysis, and that is for you to then use that information and then go from there on forward. Okay, so I'm basically just sharing what I'm seeing, what I see is happening at the moment, and how we can build on that. Okay. So, I love the amount of people here already this morning. So, welcome. Thank you. As I said, please remember that like button. And if you can't comment, it's because you haven't subscribed yet. So, please click that subscribe button as well so that you can interact in the comment section. If there's any specific instruments you would like me to look at, so if there's anything you would like me to look at, anything you would like me to analyze and share my analysis on, please let me know. I would gladly do that for any one of you. So I want to kick things off today with currencies, and we're going to start with the British pound, which has lost some of its shine. It slipped towards 1.33, not 0 point. It slipped to 1.33, which is its weakest level in over a week after its latest inflation data showed price pressure is cooling faster than expected. Now, in the UK, headline CPI held at 3.8%, missing expectations from a rise to 4%, while core inflation eased to 3.5% from 3.7%. These figures all indicate that the Bank of England's tightening cycle may finally be achieving its goal. But that success comes with a side effect. Growing speculation has now occurred that rate cuts could arrive earlier than expected. But for now, we are seeing markets pricing in the first Bank of England rate cut in Q1 of 2026. Though some traders are already whispering about a possible move in the beginning part of the quarter for next year. However, if we have a look, Chancellor Rachel Reeves has reinforced her statement with her latest comments ahead of next month's budget, saying that the government remains focused on, and I quote, bearing down on living costs. While the inflation trend is good news for households, it undermines the pound's healed appeal at a time when the US dollar is regaining some strength. Now, President Donald Trump renewed tariff talks towards China, hinting at potential 25 to 50% duties on selected imports, which added a layer of risk aversion that benefited the greenback and pressured sterling. Now, that being said, let's start looking at some charts. Let's get into the technicals. Again, if there's anything you want me to look at, please pop it for me into the comment section and I will be happy to look at that. So, looking here at GBP USD, we can see it's currently hovering around that 1.3335 range. And then we can see that our short-term support is sitting a little bit down, I would say, here around this 1.331 level, followed by this week low. If we have a look here, still in the 4-hour time frame. Obviously, we will look at lower setups as well. But, looking at it here around this 1.325, and obviously if that gives in, we're heading back down to this 1.315 level. Now, currently, I must say my personal bias on this specific currency pair is bearish to neutral, okay? The technical picture here does show that the pound's consolidating near that key support level, which is also currently its 4th straight session of losses. So we have to take that into consideration as well. Now, a decisive break below this level, as I stated, could obviously push us downwards to these lower levels here. So, focusing on this specific currency pair, I would say, the short-term narrative for now is relatively clear. With inflation softening and markets pricing in easing sooner than expected, the pound's recent strength may struggle to hold. So, as one analyst actually put it this morning, which one of the articles that I read stated that, don't fight the Fed and certainly don't forget or don't fight the data, if I remember the quote correctly. So he stated, don't fight the Fed and certainly don't fight the data. And I think that's kind of what we're seeing now here at the moment as well. If there's any questions on this, please let me know. I'll be happy to assist. That being said, let's drop it down. Let's go into some lower time frames and see what the day has in store for us from a price action perspective. Now, I'm here on the 15-minute time frame, and here we can see there is a nice trend that is forming here at the moment. So we can see that GBP USD is, getting to a point where it's getting boxed in, if that's making sense. So as we are getting closer to the tip of this triangle that we are seeing here at the moment forming, there is definitely clean breakout that is going to come from this. So here we can obviously see there is this larger liquidity zone here at the bottom. So, it went into that support, went all the way back up, came back for that retest, and then pushing higher from here. So if we can actually, I would be very comfortable with looking at a setup once we actually break this strong high point over here. So if we can break above, I would say 1.388, that would definitely secure a nice long position for me on this. And obviously based on price action, we'll put our stops just below that low, which is obviously on the opposite side of the pattern as well. But as we did state a little bit earlier, based on fundamentals and everything that we are seeing here, again, looking at an intraday point of view, now symmetrical triangles always means that the market can break in either direction. And I think that's exactly what we are seeing now. But my bias on this, as I stated, I'm still trading with the trend here. So we are still relatively bearish at this perspective point. So what I would like to see is a break lower and break out of this actual liquidity with then a slight pullback, and then I would be okay with an entry anywhere from this 1.3315 level all the way to around this 1.33 flat level. Anywhere there would give me relative ease with an entry there. So, but again, we just want to see a break and then wait for that retest, and then we can enter around this area over here. Obviously placing your stop at the opposite side. And then if we're going for an ROI of around, I would say at least 1.5 to 1, that would give us a target range around that 1.3225 area, roughly. So any shorts for if it is possible? Yeah, 100%. Okay, so I guess I just answered that question there already. So, perfect. So, yeah, this is kind of what we're looking at the moment. Obviously on a lower time frame here, just waiting for price action to give us a clear direction. So, you know, as markets are, because what we can actually see, and this is why I want the entry up here, is we might actually see markets break through, see that liquidity grab, and then see the move down. So I don't want to get faked into a trade, if that makes sense. So I would like to see a nice clean break, move higher, small retest, and then a buy. And then here at the bottom as well, breakout, small retest, and then a sell. So either one of those two options are definitely viable here today. Okay. If there is any instrument, like I said, that you would like me to look at, please let me know in the comment section. Happy to help, happy to analyze absolutely anything for you or give my input on what I am seeing at the moment. Now, moving on from currencies a little bit over into commodities, and specifically, as I stated in the beginning, natural gas, which is heating up. Now, after 2 weeks of declines, natural gas prices have turned up the heat once again, rising to $3.40 per million British thermal units on renewed demand optimism and shifting weather patterns. Now, these key drivers, obviously, that we are seeing at the moment, number one is cooler weather forecast across the US are expected to boost heating demand going into early November. So this is already, you know, very good for the actual natural gas price. And then we also saw that production in the lower 48 states eased slightly to around 106.6 billion cubic feet per day, down from those record highs that we saw earlier this year. And then thirdly, we also saw that liquid natural gas exports climbed all the way to 16.4 billion cubic feet per day, which is nearing all-time highs at the moment. So, which is leading to tighter supply, despite, you know, storage levels sitting 4% above the 5-year average. Now, this combination of softer output and stronger export flows is stabilizing prices after recent weakness. In addition, the EU has also imposed a decision regarding new sanctions on Russian liquid natural gas imports, which has reignited concerns about long-term supply stability, especially now that we are especially in the northern hemisphere, heading into winter. I know here in Cape Town it's lovely, beautiful summer, but we also have to understand that here we don't use natural gas really for heating. Okay, yeah, we have gas heaters and so forth, but not on the scale that the US and Europe and so forth use it, where it's a direct plug-in to their actual houses and so forth. So, yeah, looking at the charts here today, so currently you can see obviously prices hovering around that $3.40. Support is just below that at about $3.35, and then the top part of the wedge, I'm gonna zoom in here a little bit, see if it'll make, yeah, there you can see. So now that top part of the wedge is sitting here at $3.30. So that is also, that entire zone, I would say, here is a relatively strong support here on natural gas. But then we also have that resistance, which is sitting at $3.60, which is the highs from early July. So now we just have to balance especially if we're looking at slightly longer term outlooks, how this will play out. Now, specifically for me on this specific instrument, I am cautiously bullish, but we can also see that the RSI is overbought and so forth. So, that recent breakout of that large falling wedge pattern, that if we zoom out even further, you can see this has been running since March this year. Let me keep going. So you can actually see this pattern has been, running since March of this year. So quite a large move there. Okay, wait, let me just zoom back in here. I definitely pressed the wrong button now. I'm in the wrong time frame too. There we go. Having some Thursday blues here. Not even Monday blues. Having Thursday blues. I'm still on the wrong time frame. That's why nothing looks the way it looked just now. Okay, so big thing for us to look here at the moment is, yes, everything technically is signaling bullish momentum, but there is that possibility that some consolidation or a mild pullback may occur before the next leg higher. So especially if buyers start defending that lower, I would say $3.30 to $3.10 zone, another rally towards $3.60 and maybe even above is more than possible, especially if colder temperatures persist and liquid natural gas demand remains elevated. So the broader story here today is that natural gas is walking on a fine line between short-term supply constraints and long-term oversupply narratives. But for now, momentum appears to be favoring the bulls. So again, if we are looking at some lower time frames here at the moment, I just want to zoom in here a bit so we can actually see. You can see there's a lot of consolidation taking place here. Now, yes, we did have this smaller liquidity grab here within this liquidity zone, which did give us that pullback. We got this change of character, break of structure, but again, you can still see there's a lot of consolidation. So for me, I would like to see a push higher and then a break above that $3.45 level. Should that happen, I believe that would be a relatively good setup where you can have your stops just below here. And this would, even if you just aim for that, resistance, you can still get about a 1 to 1.5 ROI on that. However, there is also that chance for that lower pullback. So if we do break this week low, but again, remember, if we break the week low, you have to see that break of that area plus then the retest and then the move lower. So that would then give us an entry around this $3.32 level. But you're also going to have a much larger stop loss on this one. So your stops are going to have to be really high. So on this one specifically, we are definitely then, I would say go 1-to-1 on the short, but that is also the higher risk setup between the two. Personally, I'm leaning way more towards that bullish one. But again, waiting for price action to confirm with a break above $3.45. So just waiting for everything to line up before we actually start getting into the market here and start going from there. Okay. FX Beast asked for gold. not a problem. I will switch over to gold just now as well. Happy to do so for all of you. And then I just want to see here. I know this might be a dumb question. No such thing. Is oil or natural gases going to keep up with renewable energy sources? Okay, so real guys, that's currently one of the biggest debates regarding this. So, and that's also why we are seeing very large drops in instruments or commodities such as oil. So natural gas, renewable energy hasn't really taken over a lot of the sentiment there yet. Yes, obviously a lot of places now have solar, and that solar has also, there are some heating components to that as well. So yes, that has taken some of the demand away from liquid natural gas as well. But oil specifically, there are definitely a lot going on globally that is affecting that specific commodity, and which is making that it's not as high in demand because of the fact that we are seeing an increase in electric vehicles and so forth as well. So, but then we also have to look at the opposite side of that. There are still a large amount of fuel-driven vehicles globally. And then we also have a lot of countries in Africa which are decades away from full-on renewable energy. I mean, even in South Africa at the moment, and I don't want to get into too much detail on this because I don't want my videos to get blocked. But, I mean, yes, we haven't had load shedding for a couple of months, I think almost a year now. But there is a dark side to that. Imagine, a dark side to load shedding. Pun intended. So there's a dark side to having no load shedding. And what's the dark side to having no load shedding? It's the majority of our fuel stations or of our power stations are running on diesel generators. So, you know, yes, we don't have load shedding because instead of using any other source of energy, Eskom just put on generators, really big ones. And this is, you know, fueling our country as well. So, yes, if you have longer term, if we look at the longer term outlook, you know, the price of oil long term is definitely a downward trajectory. I mean, I don't know if you read yesterday's video that I actually did on oil. I don't know if you watched that video. We actually discussed, you know, that oil is currently in a 3-year downtrend. So for the last 3 years, the price of oil has declined, and that downtrend is just continuing. So with that in mind, we already seeing the longer term outlook for oil is definitely a downward trajectory. And but again, what will most probably happen at that point? You know, there is at the moment more than enough oil because OPEC is continuously increasing output and so forth. So there's clearly more than enough oil. So if the price of oil keeps dropping and it becomes, I almost want to dare say the word cheap. And I've never said the word cheap about filling my car. Because that's never been cheap, okay? It's ridiculously expensive. But once we actually get to a point where oil becomes cheap, there could actually be a possibility that people will start driving fuel-driven vehicles more because of the fact that it would be more affordable in some senses. Because remember, at the moment, if you own an electric vehicle, a full charge on your electric vehicle isn't really cheaper than, you know, filling it up with fuel. And especially if you're living in South Africa with an electric vehicle, if you recharging your electric vehicle at home at the moment using Eskom, on the back of that, you are anyway using fuel because Eskom is generating that electricity by using diesel generators. So somehow we're still losing the fight. And it's very sad to say that. Okay. So, yeah, it is a little funny. Yes, I watched that. That's why I was just wondering. Okay, cool. Perfect. So I'm guessing you're referring to yesterday's video. FX Beast asked for gold. So here's my current chart on gold. Just want to pop up some of my larger zones. So just give me a second on that. There we go. So here we can see that on the hourly time frame, obviously we are still relatively trading in this upper range over here. Now, there was this very beautiful textbook. There's no way I could say that better. Double top that we saw on Tuesday led to this beautiful sell that we got from there on forward, and this is now obviously, again, now we're seeing quite a bit of consolidation. Again, if we're going into lower time frames here at the moment, I just want to take that off. So going into some lower time frames here at the moment, the current consolidation is now sitting here between 4,160 and this basically 4,012 level, 4,010 if you want to round it off. So we do need to see this consolidation area break at this specific stage. So and until that does, I don't think we're going to get clear direction, because even, yes, we can say on a lower time frame, you know, there's a shorter term trend over here, and if that breaks, we can look for a sell. But I don't like selling into liquidity zones. Just personal opinion on this. It's very risky. Now I know trading in general is risky, but this just adds to that level of risk. So we are seeing some bullish momentum coming in here. Yes, tomorrow's CPI I think will give us very clear direction. I think prior to tomorrow's CPI, we'll probably see little to no movement on gold, and there's a big chance that it will just, you know, trade within that smaller range, just bouncing there in between. But if we can get a nice clean break above 4,100, 4,165, this will definitely set us up for, you know, a higher move. But if we go down to some lower time frames, 5 minute, 1 minute, obviously there's a lot of scalping opportunity here then, because I mean, yes, we've got this bounce here, so that intraday or almost intersession momentum is currently bullish. So even if we have a look here, we had this bounce here on the trend line, change of character, there's your break of structure, and now you can see there is a smaller liquidity forming just in this general area here. So if we can push back into that, and you can get a small long position here around 4,120, you can have a relatively tight stop loss, and this will, you know, give you a decent, even if you just aim for like 35, there's your 1.5 to 1 minute scalp trade option. Again, if that doesn't work out, we first need to wait for a change of character and then a retest, and then we can go from there. So, but again, then you just selling back down to either this trend line or the liquidity zone, which again is very, very tight. So yeah, just some options to explore currently looking at gold. Okay. I can agree on gold analysis. Thank you so much. I do appreciate that. I have a similar sentiment. Beautiful. Love that. FX Beast, I do hope that clarified some things on your end as well, and that helps you on your side as well. Okay. Cool. Let's move on. So we've covered currencies. We covered 2 commodities now as well. So, let's move over to indices. Today I want to have a look at obviously a very big index globally, but not one that I think all South Africans normally look at. Thank you, FX Beast. Appreciate the comment. Which is the FTSE 100. Now, this is actually such a nice index to trade. It gives such beautiful setups most of the time. So, and if we are looking at this, yes, at the moment, remember we just spoke about the pound. So, while the pound softened, UK equities are enjoying that opposite fate, if I can put it in such a way. So we saw FTSE surge nearly 1% yesterday to 9,515, which marked its 3rd consecutive daily gain and putting it within striking distance of its record high at 9,577. Now, think about it. The pound has been weakening for the last 4 days, and FTSE has been going up for 3. So, very nice correlation there to also have a look at that specifically. So, what is currently fueling the rally behind FTSE? Well, primarily 3 things. So, firstly, actually there's 4. Yeah, there's 4 things. So, number 1 is the softer inflation. So, which is fueling expectations of that Bank of England rate cut that we spoke about earlier, which could relieve corporate borrowing cost. And this is why it's one of the things. Number 2 is banking strength. So we saw Barclays, which is listed on the London Stock Exchange and part of the FTSE. So Barclays jumped nearly 5% after reporting stronger than expected earnings, which is, leading the financial sector higher. Number 3 on our list is housing recovery. So there we saw a few construction companies like Persimmon, which climbed 6%, and Taylor Wimpey also rose 4.5%. And this is all supported by expectations that mortgage rates might ease into 2026, especially because lower interest rates. So, and then number 4, we have merger optimism. So moving over to mining sector now, Rio Tinto rallied after reports of potential deal activity with China's Chinalco, which sparked renewed optimism around global industrial demand. And the only downside within the mining sector specifically is because we saw a drop in gold and silver prices, which saw precious metal miners such as Fresh Nilo and Endeavour Mining were notably lagging behind some of the other companies that are ranked quite high up on the FTSE. So, and they dipped modestly, if I can put it in such a way, as capital rotated into cyclical names and so forth. Okay, let's look at a chart. Let's see what's actually going on. Let's see, maybe we can identify some setups. I mean, going into the London section is currently open, so there's definitely some possibility here at the moment. So, having a look here at the chart, currently trading around that 9,536.35 level. Resistance is just above that 9,570 to 77, which is that record high zone. And then obviously we've got support relatively lower, I would say. There's a smaller support here around 9,480 to 70, and then obviously lower at 400 and 350. Okay. Personal bias here at the moment, as long as we are above 9,400 to 9,500, I would say we remain bullish. I mean, there can be dips back to here, but as long as it stays above that 9,400 level, that bullish momentum should relatively continue. So there could just be some buy the dip opportunities in that regard. Now, with this, the FTSE is remaining technically strong. We can see it's buoyed by easing inflation, expectation of improving sentiment, and so forth. So, however, that being said, doesn't mean that we should not stay alert. Okay, the index recent momentum has pushed it into slightly overbought territories, which we can see here on the RSI at the moment as well, which means that short-term pullbacks are possible before that next advance. Still, the underlying narrative is hard to ignore currently. I mean, the FTSE, its resilience is being underpinned by falling yields, so improved consumer confidence and global investors rotating back into UK assets. At this pace, one could joke that the FTSE doesn't need caffeine, unlike the British pound, as it's running purely on central bank optimism. Looking at lower time frames, though, let's go to a 15-minute. So here we can actually see, we had this consolidation area here. That was relatively early this morning. Again, I'm not going to add in a smaller liquidity zone here. That would just be stupid, especially because the all-time high is sitting right there. Okay, so for me, before any new buy, I would buy from lower down, or I would buy above that record high. But until that is broken, the possibility for a push lower, for me personally, is just too high. Now, there is this support that has formed here now, as well as this is pushing up there. So I would kind of wait for either a push above the resistance, and then you can analyze from there onwards, or a push lower and then that retest with the potential sell to this stronger low point here, or even this 9,430 liquidity zone here at the bottom. Like those would be two options. If we go really small time frame, I think the general move, maybe, hey? Now, please take into consideration we're currently on a 1 minute time frame. So, if you want to trade here, you have to be fast. Again, I'm not providing you with any advice. I'm just providing you with a whole bunch of options right now. So we had this downward channel that was nicely broken. We jumped on that trend line. So in that liquidity there, saw that change of character that appeared here, and now it is pushing, but it's just pushing. There's been no retest. So this is pure optimism that is driving this at the moment. So this would need to come back to retest before that next leg higher. But as well, the higher this is pushing up now in the 1 minute time frame, the worse the entry is getting. So yes, this is a very nice rally on a 1 minute time frame, but there was no clear entry on this, and getting in on this would just increase risk. Is that a double top on the 15-minute FTSE? That is possible. Yes, it's not the cleanest double top, I would say. I'm assuming you're referring to this because based on your next statement, that's more accurate because it is, it's more of a higher high. But for me personally, when I do look at charts in this regard, I normally like to see bodies going higher. But even if we have a look at that body versus the close of the next body, again, that does show higher highs, even if it's very, very small higher highs. So, yeah, not the cleanest double top, if I can put it in that way. Okay. But still, well spotted. But yeah, on this one, I think the rally, I mean, even on a 1 minute time frame, like I said, it's not showing anything clear at the moment. So definitely making things a little bit more difficult in that regard. Okay. Traders, is there anything else you would like me to look at? Anything that I can assist with? Any analysis you want me to have a look at? I do hope you found the session useful so far. Not so many likes today, so I'm guessing it wasn't that useful. But other than that, yeah, like I said, I do hope that there was some value that was added during this session. I do know there was a comment on my previous live where someone wanted me to share my analysis on Nasdaq 100, which I might just do quickly before signing off if there's no additional questions. If there is more questions, please let me know. But yeah, let me share my analysis quickly on Nasdaq 100. So if you do have a look here, obviously going into higher time frames, naturally, bullish. I don't think that's a doubt at this specific point. Here, however, there was a clear double top at that all-time high. But again, not the nicest double top, because why? We got this consolidation down, retest, consolidation down. So, not the cleanest setup on that. There is also currently where it is right here, you can see there is this smaller resistance area that's sitting right here. So potentially leading into tomorrow, there is a chance for a potential break above this 25,000 level. I actually think I spoke about this on Monday as well, where this is quite a psychological level, that 25,000, where a break above that would push back to 25,200. But again, we have to wait for very clean breaks above that before we can buy further up. Okay. Now, at this point in stage, looking at today's setups, there's a lot of consolidation that's taking place here. So I would literally say that the market has to choose a direction first. And once the market chooses direction, then we can wait for the retest and whatever trade we take, whether it be a small 5-minute candle buy or sell. There are some options here. But again, this consolidation has to calm down first. Okay. Agree. Oh yes, thank you. I can see I am getting the feel of this. I love that. That is so cool. What's happening on the yen? Okay, cool. A few people asking about the yen. So okay, I am happy to share my analysis there at the moment. I actually spoke about USD JPY on Tuesday during the previous live. There we go. Sorry. Yeah. So here you can see on your screen at the moment, this was the setup that I gave on Tuesday. That's obviously running very nicely in profit at the moment. So yeah, nice setup there. Definite push higher, and again, as we are getting closer to this 153.2 level there, or even 153 flat, there's definitely building chance for Japan government intervention into the yen. But currently the larger momentum on this is still clearly bullish. Again, tomorrow's CPI report will definitely add a lot into this. If we see strong inflation numbers, which would mean the Fed won't cut as aggressively, dollar can strengthen, and this will just keep up on this trajectory higher. But again, if that happens, there is higher chance for intervention. So, this could be a really volatile period in the next couple of days. I did have a specific request though for AUD JPY, which isn't, I'm going to be honest, a pair that I look at often. But it is definitely a pair that I am happy to pull up. So just give me a second. And okay, so we can actually go through this one together. And here you can see, so on the 1 hour time frame here at the moment, similar setup to what we can see on USD JPY, but there are some differences here. And again, very nice bullish momentum within the last 4 hour candle, but now coming up to that relative liquidity area here. So some resistance will start coming into the market at this point. And then obviously we do still have this higher level up here. And then our general support, which is sitting here at 97.8. Now, looking at lower time frames, so going in here to the 15-minute, there during the Asian session, I would say there was definitely a nice setup here, where we had this dip lower. You can clearly see that liquidity grab last night. Again, I'm on a 15-minute time frame, so that was last night, and then that push higher, clear break of structure, and then that little bit of consolidation, smaller break of structure, and you could have gotten entry around 7:30 this morning, and that would have obviously been the buy that is riding at the moment. So but now going into this actual liquidity area, again, now we have to wait for one or two things to happen. Either we need to wait for a break above, retest, and then you can buy again, or it's going to dip into this liquidity. We're going to have a sharp pullback. We'll see a change of character, and it will come back for that retest, break of structure, and then you can look for some short positions there as well. So those I would say are, some of the current options available on this specific currency. Okay. Where can I put my buy limits? So again, remember, I'm not providing any financial advice during these sessions. I'm just providing analysis. But if you are looking to place a buy limit, there could be a potential, I would say, retest of this 98 to 97.7 zone. So I would say anywhere there. So even if you're getting it here like 97.9, that would be a relatively clean limit order in that regard. Putting your stops, I would say, below that liquidity spike. But again, even just to get to a 1 to 2 ROI on this is a big setup. So there's definitely a lot that has to take place on this before that next leg higher could take place. And there is obviously a chance that it might dip and just come and grab liquidity down in this general area down here before going up. So yeah, just have to look at both of those at the moment. Okay. Wisdom, I do hope that helps and that adds a little bit of clarity as to what is possible. Awesome. Thank you. Yeah. So anything else, traders? Anything else that you would like to ask? Roadcast, very risky in my opinion. It really is. It's not the nicest setup. I'm looking at it at the moment and I'm like, there are currency pairs with way cleaner setups at this point in stage. That is definitely not one of the cleaner setups that we have right now. And if you have a look at how big that actual position or that movement has to be for you to get a proper ROI, the risk is quite high on that one. Okay, so I fully agree with that comment. So yeah, well done on that. Now, please remember that tomorrow brings quite a lot to the table. Okay, there are going to be a few catalysts that are being released tomorrow. Okay, it's for both the UK, so sterling, FTSE, and then also broader markets. Okay, if we have a look in the UK retail sales and PMI data are being released tomorrow, which will offer a clearer view on consumer health and business activity at the moment. Then the big one, which is the US inflation data that is due, that has been delayed, obviously, due to the government shutdown, which could swing the dollar's narrative heading into the weekend. Okay, and again, getting CPI on a Friday just already freaks me out because that normally doesn't happen. CPI is normally in the middle of the week, and we get to digest it. Now what's going to happen is we're going to get CPI on a Friday, like an NFP report, and we're going to have a very stressful weekend. And I don't have anything else to put to that. So, I mean, if US CPI surprises higher tomorrow, the dollar may extend its current lead, which could keep, for instance, the cable under pressure. It could take USD JPY even higher. Euro USD might push lower. Gold might push lower. So, and again, that stronger dollar might actually lead to a drop in indices as well. So we might see a drop on S&P, NASDAQ, and Dow as well. And that would obviously filter through to DAX and FTSE. So tomorrow's going to be fun. Tomorrow is definitely going to be fun. However, there's always two sides of a coin. Okay? If we get a softer read, this could revive some short-term risk appetite, which could give currencies and equities a chance to rebound a little bit. Yeah. So I will be live tomorrow for the US CPI. So please come and join me for that. I will go live around 2:15, so you can come and join me at 2:15 here on the ATFX YouTube channel, and I will break down the report for you live as it happens. We'll look at the fundamentals together. We'll look at the technicals together. I'll help you with your chart setups. I will provide analysis. I will provide key levels, etc. So I'll be there with you every step of the way. Okay. I will be there for CPI. I look forward to seeing you there. So, yeah. Anything else, traders? Otherwise, I think we have come to the end of today's session. So, as always, please remember that These market briefs are brought to you by ATFX Africa. And I do hope all of you are currently trading with ATFX Africa, because the fact that this is truly a broker that gives you an edge in today's markets. And why do I say this? I don't know if any one of you has, well, any other broker on the continent, it wouldn't be. But if you are truly trading with tier 1 liquidity, you see a difference in your entries, in your spreads, in everything, and the speed of execution is just amazing. And this definitely gives you an edge in today's market. So click on the link in the description if you don't have an account yet, and just go and experience the difference for yourself. And if there isn't a difference, let me know. Let me see here. Definitely will be there. Absolutely love that. I love the name too. Happy Vibes TV. Like, love that. Good session. You just didn't agree 100% with the FTSE double top. Like it's force chased. Well, Traders DNA, if you listen to the full parts, like we said it's not a double top on FTSE, because the fact that based on the price action and based on where that close was, it was more a higher high than an actual double top. So yeah, again, I agree with you that it was forced, and this is why even in the discussion that took place basically stated that there wasn't a double top and that it was actually a higher high. So awesome, and I'll see you tomorrow. So Rokar says thank you, and yes, I trade with ATFX. Absolutely fantastic. Traders, I'll see you all tomorrow. Until then, stay sharp, stay focused, trade smart, and have an absolutely fantastic day.